Check this out, everybody. It's Scott, your crypto bro, and I'm back with an update. If you're only using one indicator in the market to make trades, you're already left behind. Today, I'm going to show you what pro traders do to extract money out of the market consistently. Are you ready? Let's go. Hey, I'm Scott, and I've been a pro trader for 10 years. In these videos, I'm going to teach you everything I've learned so you don't have to learn the hard way. Remember to follow and share the channel. And also have your alerts on because I'm going to give you a lot of updates and you want to be the first to know. There are multiple ways you can use Confluence, that is at least 3 different indicators, to maximize the odds of trading going in your favor. Okay, I'm going to give you a big hack right now on the markets, and it's this. When you're trading stocks or crypto, you always have to keep an eye on the ES or S&P 500 futures. Why? If for some reason it's crashing, then you should be positioned short on your trades at that moment, okay? If it's positioned in a favorable way or bullish, oftentimes that's a good indicator of more bullish price action, particularly for stocks, all right? But it also counts for crypto. So when we look at ES, we're in a sell zone, but right now we're kind of bullish. So if you're trading stocks, you need to know what this is doing. Now we are in a sell zone for ES. I'm going to do another update on that because I do think eventually we're going to crash. We're going to come back down here to 4,800, and that's where the buy alert was, all right? Which I gave that buy alert on this YouTube channel, and that is up substantially from that level, okay? Let's move on. Now, taking a look at Bitcoin. This is the weekly chart. When we talk about Confluence, first of all, you need multiple time frames. So let's start out with this, which is actually the weekly time frame. All right. Now, when you're looking at the weekly, you can draw your patterns. All right. But you need to have at least 1 or 2 major moving averages on your chart. All right. In this case, I've removed all of mine except for the 50 EMA. That's the green moving average. Notice how when we're in a bull market, price holds that level on the weekly as support, breaks that level on the weekly, and turns it into resistance. Therefore, this was a perfect short opportunity into 98K, crashing all the way down and testing support at 60K. Now, you'll have to be able to read these higher time frame signals in the market. The other thing we use for Confluence are Fibonacci's. I'm going to go over to a daily Bitcoin chart, okay? This is how you use Fibonacci properly, all right? Right now, I want you to open up your trading view. I want you to click on the Fibonacci, all right? And I need you to click on the settings for your Fib. This is very critical, all right? This is a real hack right here. I need you to add the 0.65, all right? Because it's not going to be on there natively. And I need you to add the 0.886, all right? Make sure those are on your Fibonacci. Make sure you save those settings, all right? And let's rock this out. So basically what we're looking at here, let me remove this. On the daily chart, you need to find the significant low, all right? So I'm going to go over here to the Fibonacci tool in TradingView. This is the significant low, the August wick low, all right? Right here around 49K. Click it once, left to right, drag left to right to the September 25 high. You see that for Bitcoin, okay? And click again. Now, these fibs are in place right now. There's one more important element. This is on log scale. What does that mean? It's on a higher time frame scale. So when you click on the settings for your fib, make sure when you scroll down, it says fib levels are based on log scale, all right? Now, the important thing to remember, log scale is for your longer term or mature assets like Bitcoin and a lot of your stocks like Apple, for example, all right? If it's a meme coin and it just launched yesterday, you can actually toggle off fib levels on log and use linear. It's shorter term. For now, stay on log. Okay. Now, notice how perfectly from the wick low to the wick high, we came down all the way and tested this 786 fib level on the Fibonacci, and that is a 78.6% decline from the high to the low from this pivot low, using this pivot low. That's how you're going to use your first level of Confluence. You have your different time frames, but you have your Fibonacci. Always use Fibonacci. All right, we're going to keep it simple today. I'm going to move on. There's a lot going on here. Number one, you're in the golden pocket right now. All right, and I'm going to zoom in and show you why I ask you to add your 0.65 on your charts at home is because of this. Very often, very often, price will toggle between the 0.65 and the 0.618. This zone right here is literally the golden pocket. Okay, it's right in this zone for trading. Typically on a very high time frame, you know, a lot of traders consider it from the 50% to the 618 being the golden pocket. Personally, I like to use the exact 0.65 to the 0.618 golden pocket zone. It's going to be always a retrace level for a lot of stocks in crypto, okay? So right now we had this bear flag on the daily chart. We had a rejection from this point up here. Now it's labeled POC. What is the POC? I'll let you know right now. The POC is the point of control. That's your other level of confluence you're going to add on your chart. So remember, you have your moving averages, you have your Fibonacci sequence, right? You have your multiple time frames. Now let's do a quick little pull of the range using point of control. Come over in TradingView, click on this tab, all right? Pull down where you see the fixed range volume profile, all right? And identify this range right here. You see this wick low and this wick high? That's a range of price. We're going to click here once. We're going to drag all the way to the breakout point, click again. Now, what you'll notice here, the point of control is actually right here, about 63K. Now, why does that matter? All right. When we were up here in this point of control from this range, I literally on a live stream said, price, if it breaks down, is going to definitively come down and grab this liquidity in this range. What does that mean? That means that all the traders back in this range, okay, took most of their trades right here against this 63.6 level. Now, notice how they did not come back and get it. They moved up and away from this range in this bull flag back in October of 2024, all right? That's unfinished business. So when price broke down, naturally, it's going to gravitate towards that point of control and come back down and tag that liquidity. We came all the way back down and tagged it. We also perfectly tagged the 786 here, okay, right at about 60K. And now we bounced up and we're essentially just zigzagging in this golden pocket, okay? That's a support zone. Now, why does all this matter? When you use these different levels of confluence, okay, you can base trading decisions around those levels of confluence, all right? So never use one indicator. Make sure you have at least your multiple time frames, which includes support and resistance, right? Fibonacci sequence, fixed range volume profile, and you better throw on at least one moving average, if not a few, all right? Now, this video is getting a little long, so I'm going to come back with a part 2 on this series. That's been it for today, but let me show you how to set up a trade around these levels. If you were going to short this bear flag breakdown, you would basically just take a position, a short position. And by the way, I actually did take this short and I posted this short setup on X. So if you're not following me at Crypto Bro Alerts on X, you're missing out, okay? And this is what the risk to reward looked like on this trade. Let me just tighten this up a little bit so you can see it a little bit better. This is how you want to position yourself. So this level was a bear flag, parallel channel breakdown, and back test of resistance. Your short goes in at about 90K. Your stop was at about 93.4. All right, let's move this up just a smidgen. And basically, it broke straight down. And in fairness, I did cover in the golden pocket here, but it actually broke all the way down to the 786. Now, that move is a nice risk to reward of 35% to the downside, and the upside risk was very minimal, okay? And that's risk management. So more to come. If you like this video or this style of video, let me know in the comments section. Can't wait to see you soon. Are you still late to every pump? Make sure you follow Crypto Bro Alerts on X and check out the free email list inside the FFA. Link in the description.